versus the developed markets.
That's a great point. Dante, from the risk perspective, based upon Teresa's comments.
Yeah, so, I mean, wonderful context, Teresa. Thank you for setting the stage so well as you just did. From my vantage point, I always try to take the lens of the institutional investor. And step one is to recognize that we have so much capital, we're flush with liquidity, and this notion of the flight to safety and keeping capital in safe markets, in my mind, smacks a little bit of a lack of imagination. That when you talk to many large asset holders, going south of the Mediterranean is a line too far for them. And so I think, step one for me is first to understand that there's no such thing in my mind as bad country risk. That country risk can be hedged fully, and you can price it fully, but that there are good investments and there are good industries in even the worst places on the planet. That's kind of one big intuition that I think it's important to share with folks. The other one is this notion that the whole world is starting to really resemble an emerging market, right? So the political risk expert Ian Bremmer says that an emerging market is a place where politics matters nearly as much as economics. And by that measure, given Brexit, given the U.S. elections, given, again, the tendency of fragmentation now across continental Europe, we all start to see that uncertainty is coming home to roost in the very safe places where we were hiding capital. And so the argument today is, how do we pre-invest in the very outcomes that we want to see? So large asset holders thrive on market stability. They thrive on predictable environments. And I think it behooves them to start investing in the very sources of stability that they need for their business models to work. No emerging market price swing will lose trillions of dollars. Yet you're seeing those types of big Six Sigma black swan type of events are occurring with higher probabilities in the United States, higher probabilities in continental Europe, and in all of the advanced economies. And so I think we live in a world, as I wrote about in my recent book, where you see a convergence of both man-made and natural risk. And loved your point about the fact that risk you can measure, but uncertainty you cannot. And what we're introducing right now, especially when you think about the need for a long investment horizon, is we're introducing a lot of factors that are difficult to measure. Natural risk has no agency. Earthquakes, tornadoes don't necessarily plot where they're going to occur. But man-made risk does. And man-made risk is affecting us at every turn, whether it's things like cyber risk, whether it's socio-political cohesion, whether it's political risk, and many others.
Famine right now.
Yeah, indeed. And many of these things are coming home to roost. And we're realizing that in so many ways the post-war apparatus is starting to crack, right? The notion of the return of economic nationalism, that I'm going to protect my own country and my own people above your interest, that we live in an era where most people are retreating from global engagement. And in that environment, it's going to be very difficult to achieve the Sustainable Development Goals and move from the billions to trillions model, where I think the principal message has to be leverage, right? That part of the risk-reward trade-off that investors such as yourself and others are looking for is, how do I lever capital and how do I lever risk transfer solutions to make these investments in the first place? But what I find the biggest challenge is ultimately that most people, they would sooner take large losses in their supposed safe markets than to deploy a little bit of capital to get a first-mover advantage in emerging and developing countries. And so what we try to do is, again, put solutions around that offers liquidity and helps hedge the worst things that can occur. So operating in your home environment, you can insure against country risk and political risk. But the second you become a cross-border investor, this is a risk you could fully transfer and put a liquid instrument behind.
Are you saying that since the fall and since Brexit, since the U.S. elections, are you noticing a change in demand for types of products for your business?
What I'm noticing right now is that chaos loves a vacuum as much as opportunistic investors, right? And I think a lot of people right now are looking at this retreat and the retrenchment that we see in many Western countries as an opportunity. The vacuum will be filled. The African continent will continue to emerge as a global powerhouse, and countries specifically in the African continent, I think, will spring forward, irrespective of whatever happens in the West and irrespective of our retrenchment and sort of return to economic nationalism. I think many countries and companies within those countries are becoming investment grade on their own, and new investors are coming in with a completely new yardstick. And they're not demanding things that follow our rubric of what is investment grade. They're creating their own. And I think that's an opportunity that others will just ignore, I think, to their own peril and to their own investor returns.
Well, thank you both for that. That's well, now we're going to add a little wrinkle to it because at the World Bank